In this week's episode of the Stockscores Market Minutes, we'll talk about why volume is the fuel of the uptrend. I'll then do my regular weekly market analysis. We'll do a market scan in search of opportunity and look at the trade of the week on MRNS. All right, so volume is the fuel of the uptrend. What does that mean? Well, gravity works. Just like a rocket needs fuel to get off the ground, stocks need some kind of fuel to move into that strong, market-beating upward trend. And that fuel is volume. You need strong buyer interest to push prices higher. And that's why when you're looking for opportunities in the market and you're looking at those predictive chart patterns, you need to see that volume coming in, abnormal volume, as an indication that something is going on with that company to justify an upward trend. The Stockscores Market Scan tool and the action candle indicators, which we use for day trading, Market Scan we use for longer term trading, those both focus on finding abnormal volume. And as I said, I like to search the market for stocks trading abnormal volume and then check their chart patterns to make sure there is a positive chart pattern break. All right, let's get into this week's market analysis. First an example of this. This is a day trade example. And what I want everyone to notice is how the volume was pretty quiet when the stock wasn't doing anything, but when it started to move, notice that the volume started to ramp up. And if we look at, this first breakout candle here, you can see the volume spiking higher. And this stock was a stock that traded quite nicely on Friday, moving from $6 to $8 once that volume started coming in. So that's a 33% return for the half day that it made that abnormal move. All right, now let's get into this week's market analysis, starting us off with the US markets. And here is a chart of the S&P 500, and we remain in that strong upward trend. Really nothing new. It seems like week after week we are hitting new highs. The trend is getting a little bit overextended, running away from the more shallow trend line. And what that means is that there is some risk in the market, and therefore you want to be somewhat cautious with taking new positions. Make sure that you're not chasing stocks higher. When we look at the shorter term 30-day, 60-minute chart, we just see a pretty stable upward trend. We had a little blip along the way, but generally speaking, we have this upward trend, and now we're getting a little steeper. When trends get steeper, it implies that investors are getting more emotional, so be a little bit careful with that, but there is still no sign of weakness to be concerned of here. Moving along to the Russell 2000, you can see that it is also inching higher week after week and coming up to that longer term resistance around 173, 172. Hasn't hit it yet, so I think we still have some upside potential from here. Next up on the Canadian markets, you can see the TSX not really keeping pace with the S&P 500, and of course commodities probably largely to blame for that. The Canadian market has a heavy weighting of commodity stocks, most notably oil, and oil's still pretty quiet, although it is trying to turn. We'll look at the oil chart in a moment. Now this is still a decent chart. We have rising bottoms. We just don't really have the excitement yet, but I think this market is more likely to go higher than lower in the weeks ahead. Looking at the short-term chart, you can see we've had a little bit of a bounce back the last couple of weeks, but we're approaching this resistance here, which may impede that upward movement, and so expect that we'll probably see some sideways trading on the XIU under 25.80. TSX Venture still quiet, still in a downward trend, so you want to be very selective with the stocks that you take on this market. Along to currencies, we'll take a look at the US dollar first, and we had that little bit of concern last week because we built this rising or falling top rather. We're breaking this upward trend line. We snapped back nicely this week, but I still don't think that this market is out of danger. And so I recommend you still be somewhat cautious with the US dollar until we can get to new highs. On to the Canadian dollar, and you can see that the downward trend is intact. Downward trend is intact. We're building that sideways trading pattern, and ultimately for this to be a bullish market, we need to start moving up through that $76 level on the FXC, which is about 76 cents versus the US dollar. Interest rates, TLT still sort of in that drifting flag pattern, and basically interest rates are relatively stable. If we can break the little downward trend line from 148 down to 140, then we might resume that longer term upward trend in bond prices, which would mean lower interest rates. For now, however, I think we're just going to be pretty quiet on the interest rate front. And the commodity sector, you can see gold stuck in that little flag pattern. Kind of looks like the TLT chart in that we've got that sideways trading after the steep upward trend earlier this year. If we can break up through 142, I'll become a bull, but for now, neutral on gold. And on oil, you can see that we're slowly inching higher. We've broken that downward trend like I talked about in recent weeks, but there's not a lot of excitement. Look at the volume there. It's just not there on this stock and or on this market, which is the oil market. You just don't have strong volume coming in, and we ultimately will need that for this market to be able to get higher. On to the fear chart. Low. There is no fear in this market. That is a bit of a concern actually, because it means there's somewhat a complacent market among investors, and that can sometimes lead to trouble, but I wouldn't worry about this until we start to see a break of the upward trend line. So my outlook then, bullish on US stocks on both time frames, Canadian bullish long term but neutral short term as we are bumping up against some resistance, neutral on both time frames on gold, oil bullish on both time frames. US stocks continue to move up, demonstrating that investors really have no concern about the impeachment process. The trend is strong but ripe for profit taking, so watch for a break of that upward trend line. Gold remains stagnant while oil slowly builds positive momentum, and fear remains low. All right, on to the Stockscores market scan. We're just going to jump over to the Stockscores website here and run the Abnormal Breaks Canada scan. I like to do this on a daily basis. It helps me find stocks that are trading with abnormal volume, breaking from good patterns. The first one that I see is KTN on the Venture Exchange. It is breaking from a flag pattern, got some pretty good volume coming into it. I'd give this a 6.5 out of 10 as a stock likely to resume the upward trend. Moving along, I'm also think that this HNL, Horizon North Logistics, looks pretty good. Volume not really strong, but it is breaking through this resistance that it's had at 120. I'd give this a 6.5 out of 10 as well. When I say 6.5, what I really mean is it's got a 65% chance of moving higher. Here you see Novo Resources. It's a stock that I featured for you in this video. It continues to do well, but I think unless you own it already, I would not buy it here. It's a little late to come to the party, but I know some of you probably own this because I did feature it recently. Continuing to move along, BlackBerry had a pretty good day today, breaking up from a rising bottom. On a chart like this, I like to look at the 3-year weekly as well. So I can do that by clicking on 3Y, 3-year, and it will create this chart. And when I do that, I see that BlackBerry is still below its long-term weekly downward trend line. So that makes me not too eager to buy it here. And we'll just continue for the first 10 here. Looks like that's about it. So we've got a few decent looking stocks, so I don't think anything is a barn burner opportunity, but a couple 6.5s out of 10. All right, let's look at the day trade of the week. And of course, this is always based on my algorithm, which looks for action candles. That's the pink dot that you see on the chart. And here you can see on this 2-minute chart, MRNS made an action candle on the opening bar of the day, the 932 candle. And notice also that the volume was very strong, and that's a key component of the action candle indicator, and helps us to see that there is that fuel of the buyers that I talked about earlier. So in this case, MRNS for $100 of risk would require a position of 1,110 shares, which is just under $2,000 of capital. By the end of the day, the stock had closed at 4.5 RR. That means 4.5 times risk. So in this case, if we had $100 of risk, that meant it was a $450 gain, which represented a 23.1% return for the day on a very short 1-day hold. All right, well, that has been the Stockscores Market Minutes. I'm going to take a little break for the holidays, so I want to wish you all the best of the holidays. We'll be back in the new year, perhaps once more before the new year. I'll have to take a look at the calendar on that. But anyway, we're going to take a week off for the Christmas holiday there. Have a great week in the market and trade well.